Okay, good morning, good afternoon, good evening. Let's start with some post analysis. Let's look at what GJ gave to us last week. So for last week, I was looking to take buys because if you look at the terrain, the road was showing that from this point to this point, there was a very high velocity which the vehicle was driving. Okay, however, from this point to this point, the vehicle started slowing down, and if you look at it very closely, it started forming some curvature. It's just like if there is a turnaround at a junction, the vehicle will be running very fast until it gets to that eclipse or gets to the climax of where most advanced or experienced drivers will say, okay, this is the point I need to start gauging my momentum because it will occur automatically. Let's look at it this way. If the vehicle is approaching this point, what the driver is looking at is from which point do I start noticing some difference from my straight movement. For instance, the vehicle is expected to go straight like this, and all of a sudden, as it gets to this point, it starts curving out of the straight path. You start noticing what? There should be retardation or slowing down of the velocity. That is the same thing that occurs here. So when there is a slowing down of velocity from this point and we start noticing the decline in the speed, it is assumed that what the sellers are no longer pushing the price down as expected. Then we anticipate what? Buyers to return. But in this particular scenario, the buyers did not return as strong as expected. So what happened? This is what I was looking at. Okay, this is what I was looking at that very day. There were potential buys here in order to ride it to the top, and buy here in order to ride it to the top. So two positions were entered and both of them played out beautifully. I want this green color stuff to show, but it's not showing the position. But if you zoom closely, you will notice that there were buy positions here, buy positions here. So what I wanted to do very well is to make this to come out the way it's supposed to be. As you can see, it's not coming out. Just one moment. Let me try it again. Okay, so this is exactly what I was anticipating. Buys above here and another big buy above here. This is a swing trade. Okay, this is a day trade. However, I took some small scalps around here. Scalped these trades. So this was plus 1%. This was plus 1. This was plus 1. This was plus 1. This plus 1. This plus 1. So 1, 2, 3, 4, 5, 6 plus 6%. All of them played out. Now some will say, why are you just taking trades that look like they are just giving you that immediate profit? But the fact is, if I were to want to scalp this and I put my stop loss here in order to get 6% to this point or even to this point, most times, like you see this week here, price could weak, and if my stop loss were to be here, take me out, and I enter again, so I've already lost 1. So even if I make 6%, the total will be what? Plus 5. And don't forget, this -1 will affect what? The win rate of the trade. But this plus 6 means that the whole trades hit target. So our win rate at this very day last week was 100%. Win rate last week was 100%. The trades I shared on TradingView, this one, the one I shared on my private Telegram with this and this, and the ones I took were this, and this. So with that being said, let's go to the live chart to look at price action better. So what I'm looking at based on the daily time frame, you will see that price is just in a range. What this means is that this is the range we are looking at. We can't really tell what to do because trying to go for a buy would be being hopeful. Trying to go for a sell would be going against the trend that you're particularly seeing. I know some persons would have taken sell here with stop loss above here because of this is resistance 1 and this is resistance 2, in anticipation that price should come down to this support 1, support 2, to turn here to support 3. Okay, but I don't trade like that. I want the setup to be mature, to give me the setup that meets my criteria. So with that being said, what I'm looking at on British pound, Japanese yen is for price to give me either today a bearish close and a bullish close tomorrow for me to join the rally, or continue the bullish rally, come back for retracement, and I join it. Two scenarios: this candle closes bearish today, the next candle opens bullish, or it just continues going up, bullishly breaching this zone and retraces for me to join the rally upwards. But this sweet clean traffic here, this is what I'm targeting. This clean traffic, because immediate price comes above this zone here, I'm anticipating a clean traffic to this point, and the ultimate TP will be here, but some slowdown will be experienced around here. However, this is where I'll be targeting. So with that being said, this is what I'm looking at on British pound, Japanese yen. The next thing on my watch list is gold. Now gold is still printing very bullish price action, and my overall take on gold is for price to rally to this point. But don't forget, one thing about gold is after it has gone this high like this, don't forget that price could do what? Retrace. I need a clean. Price could retrace to this level here. Price could retrace to here before going upwards again. Like this is, look at what I'm talking about. After gold has been printing bearish, it retraced all the way to this supply zone, continued again printing bearish, retraced again all the way to this supply zone, continued printing bearish, failed to breach here bearishly, turned bullish, okay, came to this demand zone, turned here to demand zone. First of all, this was the first demand zone here. After I bullishly breached this resistance, went up, came down, this now turned to demand zone 2. This is demand zone 1, demand zone 2. So far it has been pumping. So this will be demand zone 3 that I'm looking at, where price will come to this point before doing what? Going up again to hit this resistance. So this is what I'm looking at on gold. And as you can see, gold has been showing some weakness in its bullish momentum or rally. So if we notice any dump in price, this will be the first area of support. If price takes this bearishly, then this will be our next area of support, okay, where price should do what? Hit and continue its bullish momentum. However, if it fails to stop here, then we'll just have to ride the trend to see where price will drop to. So this is what I'm looking at on gold. I'm still waiting to see, but as you could see clearly, the buyers are getting weak. So let's see if the sellers would be introduced into the market. So this is what I'm looking at on gold. Gold, potential continuation of this momentum, but I'm seeing clear weakness from the buyers. So let's wait to see if we can get a bullish breach, price to break here, take it out, then we'll continue the rally, or we'll continue this dump to this level before going up again. So this will be scenario 1, this will be scenario 2. So this is what I'm looking at on gold. The next thing on my watch list is Bitcoin, the last but not the least. Now Bitcoin has been pumping very beautifully. One thing about Bitcoin is that it is a very highly speculative trading instrument. Okay, look at price played out just like anticipated. Further bullish momentum, if bullishly breach here, which we did, and Bitcoin has been pumping. So the next resistance I'm anticipating is here. If we bullishly breach this resistance, come for retracement, then Bitcoin will now turn to the what? The Chabella phase, which is continuous rally. I don't know how high it's going to go, but this will be a very sweet spot above this resistance. I'm anticipating some sweet spot above this resistance. So this is where my eye is targeting. At the moment, this resistance has been bullishly violated, so we're anticipating price to continue pumping. Okay, so for at the moment, let's see if the bullish rally can continue or we get some retracement before continuation. But one thing about Bitcoin is that can never tell exactly when the retracement will come. So all you have to do is trade it as a speculative instrument and as a fundamental trader. So your ear is to the ground to hear of any news that could affect the potentials of a particular setup, whether to the upside or to the downside, whilst you're also putting into consideration the technicalities, which is the technical aspect, looking at repetition of setups like price action. You look at repetition of either this is a double bottom or a double top, or price taking out, let's say, break of structure or change of character, or the fair value gap. All these could be infused, applied in order to adjust price, your trading strategy to meet what the market is showing. So in everything, the few things I would like us to put into consideration: one is your risk management whilst trading this, very important. Two is your trading strategy, very important. The last but not the least is your trading psychology. Okay, trading psychology, also known as understanding yourself in the big market. You understand? It's just like you are just a strand of hair in a conglomerate of hair strands. So you know where you fall in on that particular curve. Okay, so your risk management should not be disregarded when trading any speculative instrument, whether forex or crypto or stocks or bonds or anything, even if it's the synthetic indices or indices per se. Your trading strategy, very important. Then your trading psychology, understanding the market psychology is also important. So I'm going to stop here for now. Don't forget, this is Phoenix Unique. Thanks for coming by. Hit the subscribe button, hit the notification button to be notified of new videos, comment and like. Baraka Bashad, peace.